Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Wednesday, July 17th, 2013. Well, a change of trend today and a candle that's made a higher high and a higher low. Previous day's trading we had a change of trend to the downside following this very substantial first time frame uptrend that traded up to the 1687 major high. And we saw the sellers come back into the market, sellers gaining some downside momentum. But yesterday I suggested that there was a possibility of the top of this highlighted zone holding as an area of support. And that's exactly what we've seen today, with the trend changing again back to the upside. So now we have a white body candle, and the buyers now have found some upside momentum in net terms. They've made some net bullish progress on the day between the open and the close, as opposed to the sellers for the previous day's trading. But the worrying factor here is that the buyers have failed to take control. Whereas with the previous day's trading, neither side had control, and it did raise doubt about continuation of the trend to the downside, and the price rejection that we saw to the upside, evidenced by the shadow on the bottom of this previous candle. And today we've also seen the buyers fail to take control by closing within the middle of the range. And what we want to see for these change of trends is control swing to the side that actually changed the trend, and this does raise some doubt about continuation of the trend. Now here though, we do have the influence of the major high at 1687 coming in to play, and that's what we've seen here with this shadow. We've seen the buyers losing commitment up around that level, and it is quite a natural thing for us to see. Now that does however raise doubt about the market continuing to the upside, and I would have liked to have seen a little bit more momentum, a little bit of more control from the buyers, some more commitment from the buyers, if we are going to successfully make an assault on the 1687 level and the 1700 level. So it does raise some doubt about continuation of the trend to the upside. The size of the body of the candle does cause concern because of it is quite small, and I would have preferred to have seen a larger candle. Now here, body I mean. So here we now have the market within the bounds of strong resistance overhead at the 1687 level, but some solid support down below at the top of this zone. So there is some doubt about which way the market will break out. But I think if we see either a bearish breakout to the downside or a bullish breakout to the upside, we need to be prepared to react to that. And I suggest that if we do see a strong bullish breakout to the upside, then we could see a successful assault on the 1700 round number level of resistance. Now in terms of the Fibonacci extension, and now that we're in a new first time frame uptrend, we're examining the relationship of that first time frame uptrend to the previous time the market was trending up. Yep, that's right. Here we have the uptrend and now the current uptrend. And here we haven't seen the market interacting with any of the significant levels yet. The first level up here is the 23.6% level, coincides roughly with the major high just above there, so that will be an important level. If we see price rejection from there, we could see a change of trend back to the downside. But the 38.2% is probably more important. It's just above that round number 1700, so that will be a crucial one if the market does trade higher. And then we have the other levels above there in blue sky territory. But we really do need to watch how the market reacts to these lower levels first. The Fibonacci retracement isn't really of much help here for us. We had a one candle downtrend and now a one candle uptrend at the moment, so not a lot of help with regard to the retracement areas. But the market has reacted to the 100% level and has sold off from there. We saw the buyers lose commitment. That does suggest that there is a possibility for a change of trend to the downside, so let's be on the lookout for that. If the market does trade through that 100% level, the 161.8% is just above the major high, that's at 1692, and then the 261.8% may come into play, that's at 1705, and once again just above that 1700 round number. In terms of Fibonacci, obviously a bullish market in all three timeframes. The market trading above the cloud, so bullish in the long-term timeframe, trading above the Kijun-sen, so bullish in the medium-term timeframe, and above the Tenkan-sen, so bullish in the short-term timeframe, and the Kijun-sen here is above the corresponding price action, so it's confirming the bullishness that we're seeing in all three timeframes, and does suggest that if the market finds some upside momentum. If the buyers start to come back into this market, we could see the market test to higher levels and possibly to the 1700 level or beyond. But we do want to see some upside momentum. We want to see the buyers attempting to take control of this market, which is something that we're not really quite seeing at the moment. If the market does come off, then potential support at the Tenkan-sen down around roughly around that 1650 level, and it has been a previous level that we saw resistance and then prior support in a zone extending down to the top of the cloud, and that is an important level of support for this market. Down beyond there, we do have the Kijun-sen trading within the cloud, and that's pretty much pointing flat. It has ticked up in this last session, but it does suggest that there is a possibility of price action retracing back towards there. We also have a window that was opened up in between the cloud, and that may act as an area of support if the market does trade down to there, but the window was closed successfully, so the importance of it is now pretty much negated, but still may act as an area of support if the market does trade down to there. So overall, we're looking for a potential continuation of the trend to the upside, a test above 1687. It's what we'd like to see, bullish activity up above there if we are going to see the market trade higher, but there is a possibility of the market trading lower. 1675 level may hold as solid support once again. It has for the past 2 out of the previous 4 days, and there is a possibility of that happening again. If we do see a bearish close down inside there, we could see the market trading substantially lower, so let's be aware of that. But at the moment, we just need to be patient and wait for the market to react to the strong overhead resistance or the strong support below.